Committee will come to order without objection. The chair is authorized to declare a recess of the subcommittee at any time without objection. Members of the full committee not on this subcommittee are authorized to participate in today's hearing. Members are reminded to keep their video function on at all times, even when they are not recognized by the chair. Members are also reminded that they are responsible for muting and unmuting themselves and to mute themselves after they finish speaking. The staff have been instructed to only mute members and witnesses as appropriate, when not recognized, to avoid inadvertent background noise. Members are reminded that all House rules relating to order and decorum apply to this remote hearing. This hearing is entitled Business Opportunity, Addressing the Financial Barriers to Minority and Women-Owned Business Involvement in Infrastructure Projects. I now recognize myself for 4 minutes to give an opening statement. Today's hearing will highlight the key challenges and barriers faced by minority and women-owned businesses of all sizes, including obtaining the capital and opportunity necessary to participate in large-scale federal infrastructure projects, and what is needed to ensure the mistakes of the past do not repeat and become the missed opportunities of the future. After several years of celebrating fruitless infrastructure weeks during the previous administration, I am now proud to say that the Biden administration and Congress, led by Democrat majorities in the House and Senate, passed historic investments in our nation's infrastructure last November. The Bipartisan Infrastructure Investment and Jobs Act include an additional $550 billion to rebuild our roads, bridges, ports, and to ensure clean drinking water, expand access to high-speed internet, improve our public transit systems, and address the climate crisis. And yes, that is a lot that we have done. According to the Economic Policy Institute, this law will create roughly, I want you to hear this, 772,000 jobs per year, in addition to strengthening our supply chain, improving productivity, and reducing long-term inflation. That is why infrastructure spending has typically been a bipartisan issue, with widespread support from both sides of the aisle. But for whatever reasons, that was not necessarily the case this time around. We are already witnessing announcements of infrastructure projects across this country as a direct result of passing this bill. Even announcements by members of Congress claiming credit for investments that they voted against. The benefit of this historic law will be felt for the generations to come, and numerous studies have shown that infrastructure yields up to 17% return on investment on average, which is why we need to ensure that all Americans have the opportunity to share in this economic activity. While federal infrastructure projects of the past have increased economic growth, historically, they have come to cost Black and Brown communities their wealth. Fortunately, under the leadership of Chairwoman Waters, Financial Services Committee, Democrat, to work to include several provisions in the infrastructure bill and the American Rescue Plan that will undeniably assist minority and women-owned businesses access to capital necessary to complete these projects, including investments in state small business credit initiative and the Minority Business Development Agency, amongst others. Even with these investments, the challenges associated with minority and women-owned businesses assessing capital required to bid on these infrastructure projects will not be solved overnight. Thus, the reason for this hearing, so we can hear from our experts and you. Lastly, according to the Small Business Administration, just 1.7% of federal contracts went to Black-owned small businesses and 1.8% to Hispanic-owned small business. Historic lack of access to capital, delayed payments from contractors, and the lack of credit and insurance are all contributing factors to these dismal numbers. Thus, thank you, Congresswoman Waters, for your leadership and for also establishing the first ever Diversity and Inclusion Committee. So with that said, I'm excited to hear from our experts from this hearing. The chair now recognizes the ranking member of the subcommittee, the gentlewoman and friend from Missouri, for 5 minutes, Congresswoman Ann Wagner.
I thank you, Madam Chairwoman, for holding this hearing today, and I want to welcome and pardon me, thank our witnesses for testifying about the obstacles that women and minority-owned businesses face when it comes to accessing capital and financial services. Small businesses make up 99% of all employers in the United States and employ some 61 million Americans, or almost half of our workforce. As our economy continues to recover from the pandemic, it is critical that Congress focus on policies that enable all businesses, regardless of race or gender, to open, grow, and thrive. While not every business goes public, all businesses need access to capital, and private market exemptions provide a useful option for raising capital for many companies. FinTech is also proving to be a new avenue to accessing capital that can be more efficient and less costly. This includes access to microfinance, which can be especially beneficial to small business owners and entrepreneurs who might have difficulty obtaining the funding from more traditional financial institutions to start or scale up their business. Fintechs have filled this gap. And according to Opportunity International, a nonprofit that offers microloans, microfinance offers the chance to, and I quote, focus more on marginalized people who are left behind, and we make sure that the excluded have access to responsible financial services, end quote. Congress should continue to focus on finding ways to reduce the regulatory burdens to starting and growing a business, highlighting innovative solutions like those offered by FinTech and microfinance, and encourage startups that are working toward understanding the needs of underserved communities. While this hearing is about access to capital and financial services, this subcommittee must also focus on permanent regulatory reforms to lift and strengthen minority and women-owned businesses. These businesses benefit when we cut unnecessary costs and expand opportunities for investors to put their money to work. I thank the chairwoman, and I yield back the remainder of my time.
Thank you. The chair now recognizes the chair of the full committee, the gentlewoman from California, Congresswoman Maxine Waters, for 1 minute.
Thank you so very much, Ms. Beatty. I'm so pleased that you're holding this hearing. It is so timely, it is so important, and I thank you for your leadership. President Biden's $1.2 trillion Infrastructure Investment and Jobs Act not only will repair our nation's crumbling roads and bridges, but also presents an opportunity for minority and women-owned small businesses. As we celebrate Black History Month, we must keep in mind that diversity and inclusion require intentionality. We shall, with the initial rollout of the Paycheck Protection Program, the big banks provided concierge access to their larger majority-owned clients instead of providing fair access to all small businesses. And it required the members of this committee to end that practice. I'm interested in hearing from our witnesses on what needs to be done to ensure the federal government and the financial sector make available the resources necessary for minority and women-owned firms to access the many federal contracts in the infrastructure legislation. So I thank the witnesses for their testimony, and I yield back.
Thank you so much, Madam Chair. Today, we welcome the testimony of our distinguished witnesses. First, we have Mr. Farad Ali, President and CEO of Asociar. Next, we have Ms. Tawana Black, President and CEO for Center for Economic and Inclusion. Then we have Mr. Philip Gaskin, Vice President of Entrepreneurship Kauffman Foundation. Then we have Ms. Ying McGuire, President and CEO of the National Minority Supplier Development Council. And then we have Ms. Jeanette Quick, Head of the Compliance and Public Policy, Gusto. With that said, witnesses are reminded that their oral testimony will be limited to 5 minutes. You should be able to see a timer on your screen that will indicate how much time you have left, and a chime will go off at the end of your time. I would ask that you be mindful of the timer and quickly wrap up your testimony if you hear the chime, so we will be able to be respectful to both the witnesses and the committee members' time. Without objection, your witness statement will be made part of the record. Mr. Ali, you are now recognized for 5 minutes to give an oral testimony on your presentation.
Hey, good morning, Chairman Beatty and Ranking Member Wagner and members of the Diversity and Inclusion Subcommittee. My name is Farad Ali, President and CEO of Asociar. Additionally, I represent the U.S. Black Chambers, President's Circle, and the Airport Minority Advisory Council on behalf of my group. On behalf of Asociar and all the Black businesses everywhere, I'm honored to share my testimony with members of the subcommittee today on a myriad of issues that Black, women, and minority businesses face when assessing capital contracts and infrastructure projects. Thank you for giving me this opportunity to participate in the hearing today. Asociar was founded in 2012 and established as a values partner, working to provide technology solutions for various companies in IT and services. For the past 10 years, we've been able to implement growth strategies for service delivery and supply chain solutions as a value-added supplier. As a certified minority-owned business by the National Minority Supplier Development Council and a certified Black-owned business by the U.S. Black Chamber and a certified historically underutilized business in Texas and in North Carolina, we still face challenges in accessing to opportunities for growth in the public and the private marketplace. Federal procurement has provided many Americans with opportunities to grow business, hire employees, build wealth, and strengthen the economy in the communities where we live and work and serve. The Infrastructure Investment and Jobs Act is a once-in-a-generation opportunity to invest in critical projects throughout the nation. However, if we are to realize the long-term returns on those investments, we must understand that we must hire to do these projects in a way that's very intentional. This will require coordination and making sure that we're able to be transparent from Congress to address two key factors: access to capital and access to contracts. So first, whether it's pouring concrete, replacing outdated pipes, or installing next-gen broadband and electric charging stations, many minority-owned firms will be blocked from bidding on these contracts because of lack of capital, not lack of capability. To address the barriers of capital access, financial institutions should be incentivized to create lending products that align with federal procurement contract terms. This will improve the cash flow management and alleviate credit risk. Additionally, Congress should expand and increase funding in the Emergency Capital Improvement Program through the U.S. Department of Treasury. That's to help CDFIs, community development financial institutions, and minority development institutions to invest in these underserved communities. Helping to build and investing in the fundings in these programs will be direct and create effectiveness for these financial institutions to participate. Second, to ensure that the federal and state agency awarded these contracts are able to identify qualified various firms, there's a need to have a formal alignment between agencies that serve minority and women-owned businesses, like the U.S. Black Chambers, the National Minority Supply Development Council, Airport Minority Advisory Council, and the Conference of Minority Transportation Officials. As you know, much of this infrastructure bill is going towards the DOT and FAA, and those are the organizations that can support their work. For decades, these organizations have facilitated increasing the capacity of thousands of diverse firms and provided support for shovel-ready projects at state, federal, and municipal levels. Third, to build marketplace capacity, Congress must strengthen policies and facilitate, measure, and report mentoring partnerships between larger government contractors and minority and women contractors. Historically, underutilized businesses risk failing into a cycle of underutilization. For example, to get a contract, you must show past performance. why do you have if you have a chance as a buyer to choose between a vendor who has more performance and less performance, you're going to choose the one that has more performance. So I think it's going to be critically important that we begin to work on strengthening mentor protege partnerships. Just you'll have my testimony before you. And in the interest of time, I'd just like to follow up with just the last 3 points. That making racial disparity and racial wealth gap reduction is an economic imperative which benefits everyone, not just the social benefit directed at a selected population. It's critical that we highlight business solutions that ensure utilization of women and minority firms. And I think there's 3 ways we can do this: promote lending products in line with federal procurement contracts, incentivize coordinations between agencies and minority serving institutions, and incentivize measurement and subcontracting and mentorship and lending with the financial institutions. Businesses build communities, and policy sets the foundation for the growth and sustainability of business and community prosperity for everyone. So if executed correctly, the Infrastructure Investment and Jobs Act can help transform minority businesses and communities and accelerate the nation towards long-term success. Thank you for this opportunity to testify, and I look forward to answering any questions that you may have. Thank you, Madam Chair, Madam Ranking Member.
Thank you so much, Mr. Ally, for your testimony. Ms. Black, you are now recognized for 5 minutes to give an oral presentation on your testimony.
Thank you, Madam Chair, Chairwoman Waters, and members of the committee. I appreciate and am honored for this opportunity to provide testimony today. My name is Tawana Black, and I'm the founder and CEO of the Center for Economic Inclusion. The center is committed to closing racial employment, income, and wealth gaps by building racially inclusive and equitable regional economies. Founded in 2017, the center is the nation's first organization dedicated exclusively to closing racial wealth gaps by partnering with employers and regional government agencies in order to build civic infrastructure and build the capacity of employers, both in the public and private sector, in order to close racial wealth gaps and build racially equitable and inclusive workplaces. In addition to working with the public sector and private sector, the center supports the work of employers throughout the Minneapolis-St. Paul region and the 7-county metropolitan area, as well as regions across the state of Minnesota and across the country. Our economy right now requires diverse talent in high demand, resilient industries with family sustaining jobs. The economy of the future needs businesses that are resilient, businesses that can meet the growing supply chain needs, which will require that Black, Indigenous, Latinx, and Asian businesses and communities have improved access to capital, land, and homeownership opportunities. Our organization is deeply committed to growing Black and Brown-owned businesses, and I want to lift up both the challenges that our businesses face and the opportunities that our businesses provide toward creating jobs and wealth in our economy. The center imagines an economic shift that can occur as we continue to invest in generation opportunities to address our country's infrastructure needs. However, this can only be accomplished if we address systemic barriers in contracting and the undercapitalization of minority and women-owned businesses, particularly those faced by our Black and Latina-owned businesses. Black, Indigenous, Latinx, and Asian-owned businesses and communities carry the historical burdens of structural inequities that have been combined and added to throughout the COVID-19 pandemic to create powerful obstacles facing our businesses. Nationally, more than 41% of Black-owned businesses, totaling 440,000 enterprises, have closed compared to just 17% of white-owned businesses. Minority-owned businesses grow at 3.5 times the rate of all Minnesota-owned businesses, yet our inequitable access toward capital is keeping our businesses from continuing to grow. More than 8 in 10 Black employees and 7 in 10 Indigenous employees have filed for unemployment in our state. And we see that between 2000 and 2020, the wage gap between Black and white workers has continued to increase at a rate that our economy can no longer afford. In Minnesota, we have a saying that we all do better when we all do better. This comes from former late United States Senator Paul Wellstone. Today, we are not all doing better. At the center, we believe that now is the time for us to invest in creating an inclusive economy that benefits all people. We project that achieving racial equity and inclusive growth leads to better economic participation and will generate close to $6,000 to $8,500 in annual per capita income. This economic activity will lead to greater opportunities for intergenerational wealth that benefits our entire economy and demonstrates the need and opportunity for both assessing and prioritizing inclusive policies and investments that accelerate economic growth and competitiveness. I thank you, Chairwoman Beatty, Chairwoman Waters, and members of the committee for both your leadership and your time today. Together, we believe we can write a new story in our country's history, developing processes and investments for informing our infrastructure policies and investments possible to fuel our country's economic growth through the power of inclusion, equity, and belonging. Thank you, and I yield back this time.
Thank you so much, Ms. Black, for your testimony. Mr. Gaskin, you are now recognized for 5 minutes to give an oral presentation on your testimony.
Thank you, Chair Beatty, Ranking Member Wagner, and members of the subcommittee for the opportunity to testify today. Kauffman is a private, nonpartisan foundation based in Kansas City, Missouri, where I lead our work on entrepreneurship. While most of our work happens outside the Beltway, we are engaging Washington to bring half of our nation's potential entrepreneurs off the sidelines. This work is deeply personal. My family lived 1 block away from a zip code with a better reputation. My dad would pick me up after school, and regularly we'd go to a bank. And one day I asked, "Dad, why do we go to so many banks?" Turns out he was trying to get that first loan to open a chain of convenience stores. My dad's barrier to entry was simple. He didn't live in the right zip code. He had good credit, but he didn't have credit experience. 4 years later, a Black-owned bank gave him that loan, which he used to open a successful convenience store in South Central Los Angeles. His success led to another loan and a second store, but even with that success, my dad continued to face barriers because of the color of his skin. His experience resembles reality that many Americans still face. Today, Black-owned businesses are twice as likely to be rejected for loans, start with 3 times less in overall capital, and 4 in 10 entrepreneurs of color are too discouraged to even try for a loan for fear that they won't get it. Even more alarming, of the $69 trillion in global assets under the 4 major asset classes, less than 1.3% is invested in firms owned by women, Black Americans, and other people of color. America cannot afford to waste the energy and ideas of even one entrepreneur. Women and minorities represent the last great untapped asset class in America today. And we have no better opportunity to bring these entrepreneurs out of hiding than ensuring equal participation in rebuilding our infrastructure. Untapping this great American resource, our people, is something for which I see strong bipartisan support, but will require we address the capital access gap for underserved businesses who stand ready to meet the moment. At Kauffman, we know the 4 keys to success: equitable access to opportunity, funding, knowledge, and support. These are the pillars of our America's New Business Plan, a research-vetted policy platform this committee should consider. If our plan is the what, we must not forget the who. We all must champion the help of the locally trusted organizations, smaller, non-traditional lending partners, and institutions grounded in the historical and cultural implications of a community, including MDIs and CDFIs. In our own work, innovative capital solutions like AltCap and the Kansas City COVID-19 Relief and Recovery Loan Fund and our Capital Access Lab are proven models the committee should examine for replication for the entrepreneurs ready, willing, and able to rebuild America. But capital alone is not enough. The knowledge gap needs to be addressed as well, ensuring all can find these lending solutions or even the contracting opportunities rolling out across the country. In the who do you know world of contracts, our research shows new business owners simply do not know as many people. These challenges are also discussed in America's New Business Plan. The role of federal government is critical in assisting these entrepreneurs. A thriving entrepreneurial landscape will require a robust public-private commitment towards change. In closing, the Kauffman Foundation is not only an incubator or grantor, but we also conduct real-world research into what succeeds and what fails in entrepreneurship and capital access. Because of this, We would like to remain a resource to policymakers and members of the committee as a go-to partner for premier research, policy recommendations through America's New Business Plan, industry knowledge, and case studies on successful models of expanding opportunity to America's greatest untapped asset class. Thank you, and I yield back my time.
Thank you so much, Mr. Gaskin. And let me also say thank you for sharing your family story. Very much
Thank you.
appreciate it. Mrs. McGuire, you are now recognized for 5 minutes to give an oral presentation on your testimony.
Thank you, Chairwoman Beatty, Ranking Member Wagner, Chairwoman Waters, and the distinguished members of the Subcommittee on Diversity and Inclusion. Thank you so much for the opportunity to testify today. My name is Ying McGuire. I am the CEO and the president of the National Minority Supplier Development Council. We believe every business deserves an unbiased chance. Our organization serves as a growth engine for minority-owned businesses while enabling our 1,500 corporate members to advance economic equity. NMSDC certified minority-owned businesses have created $400 billion in economic output annually, while generating $48 billion in tax revenue and 2.2 million jobs across the country. Today's hearing came as America is experiencing a widespread and long overdue reckoning with systematic racial and gender injustices and inequalities. Since taking office last year, the Biden and Harris administration has made several important commitments to minorities to decrease the racial wealth gap. These include requiring 15% of all federal contracts to go to small and disadvantaged businesses by 2025, releasing the SBA disaggregated racial and ethnic data on small business contractors, and making improvements to the category management system. And these efforts are welcomed, especially as we learn the racial wealth gap continues to be the driver for change and a policy priority among business owners. While there have been significant efforts made to address the racial wealth gap, more opportunities exist within contracting and procurement through the federal government. The Bipartisan Infrastructure Investment and Jobs Act serves as a catalyst to meet the moment. With the passage of the infrastructure bill, Congress and the Biden administration pledged that minority-owned businesses would be prioritized for federal contracting opportunities and would not be left behind as infrastructure projects unfold across the country. At a time when many minority-owned businesses find themselves in a long recovery period from the pandemic, it is absolutely critical that they are in the pipeline for procurement. Not only do federal contracts help businesses, but they also create jobs and contribute to the recovery and stability of our communities. In order to meet the moment, besides access to contracts, there are 2 other areas in which I believe this committee and the administration can take actions towards ensuring equitable recovery. 1, continued emphasis and action towards ensuring minorities have access to important financial and increased capital to start and grow their businesses. And 2, the creation of a minority business enterprise designation to equalize access to contract opportunities. As members of this committee are well aware, access to capital remains one of the most significant issues for minority business owners. SBA loans has been great instruments to assist small businesses with fiscal challenges during this difficult economic times. However, as a business owner, one never wants to take on more debt. A shift towards new access to capital models that do not add additional debt burden is needed in order for MBEs to be economic growth engines in underserved communities. My recommendation for the creation of the federal designation for minority business enterprise is based on evidence that while there are existing designations for small and disadvantaged business, businesses, it is our experience that these historical designations have not addressed the wide institutional disparity of federal contracts awarded to MBEs. I have 28 seconds left. I applaud the work of the subcommittee, and I'm committed, our community is committed to work with you on these issues. A friend once said, access to capital is a bridge, access to contracts is sustainability, and thank you. I look forward to taking your questions.
Thank you so much for your testimony, Mrs. McGuire, and you used your last 28 seconds well. So thank you so much. And let me also say thank you for what you're doing. Your predecessor, Adrian Trimble, also sat in that seat several years ago. So thank you so much. And now, Ms. Quick, you are recognized for 5 minutes to give an oral presentation on your testimony. Ms. Quick, you are now recognized.
Member
You need to unmute.
minority.
I think we may have a bad connection.
Can you hear me?
Give us a moment, please. We definitely want to hear your full testimony. Okay, now we see you on screen. Let's see.
Can you hear me?
We can hear you now. Thank you.
Thank you. Sorry about that.
Hmm.
First, I would like to thank ranking member and distinguished hearing.
Ms. Quick,
We've assured
I'm getting a note on my screen that says you have bad bandwidth. Am I the only one
Jeanette
not
Quick.
being able to pick her up?
No, I can't either. No.
Madam Chairwoman, she seems to be going in and out, and you see
Yeah.
that triangle, it means that it's a bad connection.
Right, and
give
I'm
that
getting a
connection.
note saying it's not enough bandwidth. Thank goodness we have infrastructure to hopefully help with that. Ms. Quick, let's try this again.
Can you call in on another line potentially, or? I'm not
Oh,
sure.
that's a good idea. Ms. Quick, thank you, Congresswoman Wagner. If you have a phone, you can probably phone in and we would be able to hear you. And you may be able to leave your screen up so when it comes in and out, we can see you. If you mute your computer screen and leave it on and call in with your phone. Can staff give her a phone number to call into, please? Okay, to the committee members, staff is already working on this. So thank you. So we will just pause for about 60 seconds so we can get the full benefit of her testimony.
Hello?
Yes, are you on a phone now, Ms. Quick?
Yes, I am.
All right, and
Yeah.
we can hear you clearly. So let's start over. Ms. Quick, you are now recognized for 5 minutes to give an oral presentation on your testimony.
Thank you for your patience. First, I would like to thank the Chairwoman, Ranking Member, and distinguished members of the subcommittee for holding this important hearing. We have a shared goal of ensuring that women and minority-owned businesses have equal access to capital and opportunities for growth. My name is Jeanette Quick, and I am Head of Compliance and Public Policy at Gusto, a people platform that empowers small businesses nationwide. On a personal note, small businesses are near and dear to my heart. My mother is a Vietnamese immigrant who owned an ice cream shop when I was growing up. I know firsthand how hard the work is of small business owners and how important capital can be to their success. And as a former staffer, I am thrilled to be on this side of the dais to be able to speak for the more than 200,000 small businesses and millions of their employees that Gusto serves. Gusto provides payroll, human resources, health benefits, and financial tools to small businesses across the country. Our work uniquely positions us to understand the needs of small businesses and how best to serve them during this challenging time. Throughout the pandemic, Gusto has focused on ensuring that small businesses have access to capital. Gusto facilitated billions of dollars in PPP loans for our small businesses, and we are connected to more than 80 financial institutions, including CDFIs, to ensure that our customers have access to fair and responsible capital. Gusto is also the founder and chair of the Small Business Relief Council, a cross-industry coalition of over 80 companies representing millions of small businesses. We are well positioned to provide insight into small business financing challenges. Gusto believes that a healthy small business ecosystem is one that is fair and inclusive for all businesses, including those owned by women and people of color. We support proposals that ensure equal access to the financial system and inclusive access to federal procurement and infrastructure projects. My written remarks today include a longer discussion on obstacles that women and minority-owned businesses face in starting and expanding their businesses and policies that can help address these disparities. According to Gusto data, action is needed now to help small businesses. Our data shows small business payroll reserves in hard-hit industries are tighter now than they were during the height of the early pandemic. Since the start of 2022, 26% of businesses, primarily in the personal services sector, have less than 1 month of payroll in reserves. That's up from 10% when PPP funds first started to impact small businesses in 2020. Without any new federal aid, small businesses have fewer resources and capacity to absorb future shocks. Minority-owned businesses have historically experienced unequal access to capital. For example, white-owned startups begin with more than 3 times the capital of Black-owned startups. Women and minority-owned businesses persistently report having lower levels of access to financial institutions, and as was demonstrated during the pandemic, lack of relationships with traditional lenders led to lower access to PPP loans for these groups. Our data shows that the government can and should do a better job of outreach to these communities to ensure they have access to financial products and services that can meet the needs of their businesses. Gusto is encouraged that the subcommittee is considering legislation focused on providing equity funding to minority business owners through the Minority Business Development Agency. These targeted funds, coupled with technical assistance and training from the MBDA, will have an amplified impact on businesses and the communities they serve. Gusto supports reforming the Small Business Administration to better serve women and minority-owned businesses. We urge the subcommittee to consider mechanisms to incentivize private lenders to enter the small business lending market, including by reducing barriers for SBA lender eligibility and reevaluating whether the SBA's lending programs are fair and inclusive, including whether the SBA or other lenders should continue to use criteria such as background checks, personal credit scores, collateral, or other information that has historically disfavored women and minority business owners. This is an incredibly challenging time for our country, and we can't lose sight of the fact that small businesses are the job creators and economic engine of our country. Despite the massive upheaval caused by the pandemic, we are seeing an increase in new business starts since 2020. Women, and particularly women of color, are jump-starting the recovery. Nearly half of businesses started by women in the past year are minority-owned. Our goal at Gusto is to create a world where work empowers a better life, and we owe it to all entrepreneurs to ensure that policies are in place to allow them not just to survive, but also to thrive. I thank you again for the opportunity to testify, and I welcome any questions you may have.
Thank you so much. Thank you so much, Ms. Quick, for your testimony. And let me also thank you for sharing your family story as well. I now recognize myself for 5 minutes for questions. I'm going to try to get through several questions, so if you could use brevity for your answers. The first question is for you, Mr. Gaskin. I stress the importance of ensuring geographical diversity of venture capital investments in an effort to attract more investment and talented, diverse opportunities across the country. In my first hearing, someone on the other side asked me, would I look at rural areas? And the answer is yes. So can you speak to the impact of venture capital investment in places where it's not typical as it is in Silicon Valley?
Thank you. Yes, I am. If we look at research showing that over 75% of all venture capital goes to 4 to 5 geographic areas, highly populated. What happens if you're an entrepreneur and you're in the middle of a state or you're in the middle of the country? Too many entrepreneurs are on the sidelines. And I would say of that funding, only just over 2% goes to African-American women-led firms and just over 1% to African-Americans, and it gets lower for all of the others, which is unacceptable. So the role of community development financial institutions and MDIs is really important here because they understand community and they understand the businesses that are in those communities and how to better support them and get money to them. So I highly recommend that the role of community development financial institutions, MDIs, is something that the committee considers as we move forward. Thank you.
Thank you. Mr. Ali, last Congress in the House, we passed bipartisan legislation that I introduced to codify a mentor-protege program at the Treasury Department, a new voluntary program that seeks to partner large financial institutions with small community and minority-owned banks. In your testimony, you actually mentioned such a program. My question is, would you, as an expert, be willing to write a letter, work with the Transportation Department, which we know these dollars go through the U.S. Transportation Department, and also work with the Department of Commerce? Because when you look at their Minority Business Development Agency, which is there, they are responsible for a large number of dollars in programs. So tell us what you think about that and what impact it could have.
Yeah, thank you so much. I like to think that it's very important that understanding the capital and the capacity building is important. And so having the capital be there with the emergency capital improvement plan is critical. And as you had banks, for example, with the MDIs, JP Morgan partnering with Mechanics and Farmers Bank to build. And because as we have heard from testimony from Mr. Gaskins, that provides some community awareness, allowing the capital to be deployed quicker. MBDA having these centers that will build the capacity is also critically important. It allows for there to be connectivity between capital and capacity. So I'd love to work with that. I appreciate the MBDA. I've worked with them for 20 years, understanding the ability to build the capacity of minority businesses, but aligning those businesses with capital so they can get access to contracts is critical because the contracts have requirements, and then without capital, you can't access those. So I'd be honored to be a part of that. Thank you very much, Madam Chair.
Thank you. And lastly, as we know, prior to the passage of the Infrastructure Investment and Jobs Act, Congress passed the American Rescue Plan, which authorized some $500 million for technical assistance and outreach to minority-owned small businesses through the State Small Business Credit Initiative. Ms. Black and Mr. Gaskin, do you believe it would be wise for states to leverage the State Small Business Credit Initiative to enable minority and women and even rural-owned small businesses to compete with this flood of dollars that we have? And I'm gonna give you 20 seconds each.
It's a simple answer. Absolutely. It's critical that we leverage those networks and leverage those businesses in order to stimulate economic growth in the communities.
Well, we heard that from an expert. Okay, Mr. Gaskin.
Absolutely. When you've got 83% of entrepreneurs can't get a bank loan or venture capital at the time of starting business, we've got to get money to them and find them in communities, especially in rural America.
Mrs. McGuire. Mrs. Quick.
Sorry, I was on mute. Absolutely, the government agencies like MBDA need to partner with private sector and the community partners.
Okay, I have 1 second. Last witness. Well, I'm sorry, my time is up. So I yield back. And now I recognize the gentlewoman from Missouri and our ranking member, Mrs. Wagner, for 5 minutes.
I thank my friend, the chairwoman of this committee. Small businesses are responsible for employing almost half the workforce in America today. And in our current labor crisis, Ms. Quick, this is going to be a question for you. Ms. Quick, could you please provide insight on why companies like Gusto and other fintechs offer crucial resources to companies that lack the capital to hire in-house legal or finance or HR services that most larger businesses can afford? Ms. Quick?
Thank you for the question. Gusto helps small business owners bridge the gap to transition to a sustainable company. Our comprehensive services, which span payroll, human resources, health insurance benefits, and financial health benefits, help small businesses scale and manage their growing business. Gusto offers a suite of financial products called Gusto Wallet, which is available to employees of employers who use Gusto Payroll. These products include cash accounts where employees can set savings goals and an earned wage access product called Cash Out. These products help promote financial health and wellness by putting the user in control of their paycheck and avoiding high cost, often predatory small dollar lending products. We believe that fintechs and other non-bank lenders have the ability to expand access to credit for small businesses in underserved communities. Black-owned businesses disproportionately obtain PPP loans from fintech lenders who often use automated underwriting systems to approve loans. These automated underwriting systems improved approval rates for Black borrowers who sought loans at both fintechs and traditional banks. Through our platform and products, Gusto has deep expertise in understanding the financial health of small businesses and the challenges they face in accessing capital and financial services. This understanding became stronger as we assisted our small business customers through PPP and other COVID assistance programs. Fintechs can be able to respond faster and enter underserved markets more efficiently than some traditional financial institutions. We view fintechs as a value add to the financial ecosystem. Both fintechs and traditional players are important, but we know fintechs are a great addition based on our customer experience.
Okay, well, Ms. Quick, do you believe that the services you provide to these small and micro businesses have helped new firms, for instance, survive?
Yes, we do.
Ms. Quick, the consumer price index increased 7% over the last 12 months, a record increase that is hurting both businesses and consumers alike. Could you please expand on the importance of AI and other fintech software that can quickly respond to market conditions and provide capital to small businesses and startups?
Great question. As I mentioned, fintech software providers are able to respond quickly and more efficiently to changes in the marketplace, often through automated underwriting and taking into account market conditions in real time.
Also, Ms. Quick, Gusto advertises their ability to help small companies and businesses with everything from payroll runs to filing your taxes at local and state and federal levels, as well as day-to-day employee management. Have you seen the positive impact of crowdfunding on small businesses?
We support equal and fair access to capital for small businesses, whether it is needed for startup funds or growth. Gusto doesn't have specific data on whether our customers use crowdfunding as a source of financing. We have focused on lending partnerships, but we certainly support any means of accessing capital and growing businesses.
Do you believe crowdfunding is a reliable and essential part of raising capital at all stages of small businesses or startups?
Yes, we believe crowdfunding can be helpful to starting businesses.
Great, thank you. I will yield back my time, Madam Chair.
Thank you so much, Ranking Member. The gentlewoman from California and Chair of the full committee, Congresswoman Maxine Waters, is now recognized for 5 minutes.
Thank you so much again, Chairwoman Beatty. I'd like to direct my first question to Mr. Gaskin. I did not know that he was in California and the Los Angeles area, but I want to know whether or not he is aware of the $12 billion that Senator Tawanna and I put together for CDFIs and MDIs, and $1.25 billion has been allocated already. Mr. Gaskin, are you aware of that?
Yes, we are aware of that, and also doing our CDFI work here in Kansas City. So I appreciate greatly what you're doing. Thank you.
All right, well, thank you very much, because one of the things that I believe is that we've got to do more to help our small businesses know about CDFIs and MDIs and the resources that we're allocating to them so that they can have access to these funds.
Yeah.
Also, I'd like to know whether or not You understand the work that Ms. Beatty and all of us did on this Financial Services Committee with PPP. And when the big banks basically took care of their concierge clients, we quickly put another 60 billion in and gave a time frame for it to get it out. And of course, they did very well. Our MDIs did very well and CDFIs in getting that money out. So it's a new day in this committee. This committee understands the value of CDFIs and MDIs and access to capital, and we work very hard. Now, what I'd like to do is I'd like to know more about incubators. I believe that we need a lot of incubators. Ms. Beatty and I would like to work on funding incubators so that we can have the resources for small businesses to learn a lot that they need to know in order to be successful. You know, the insurance and paying the taxes and the projections and all of that. So what do you think about an effort to multiply incubators in this country?
And thank you, and I agree. And our, as I mentioned, our testimony in our America's New Business Plan, we lay out the pillars of funding: knowledge, support, and opportunity. And in those are opportunities and suggestions that relate to those type of supports. A lot of our grant making has been to entrepreneurs, we call entrepreneur support organizations, that have included incubators that help entrepreneurs overcome these barriers of startup, ranging from knowledge to connection to tools, whatever.
And do you think that we should, Ms. Beatty and I should try and put together direct funding of some kind to develop more incubators?
Yes, in communities, especially in rural communities where entrepreneurs may not have access to a larger city. So how do you, I think that would be helpful.
All right, now for what Ms. Beatty is focused on today with infrastructure, we know that the money is going out to the cities and the counties and the states and all of that. And what I've discovered is we don't have enough of many of our small businesses that are involved in pre-bid conferences to understand what the opportunities are for contracting. What can we do about getting that information out? You got to be in the pre-bid conference.
Exactly. Well, contracting, as I mentioned in my comments, is very, very important. And one of the things that, whether it's incubators or other accelerators can do, is communicate those out. I think starting in the community and asking the questions and looking at what does the community need, what do the people need, and getting an understanding of the ecosystem of communities, and really listening block by block what the entrepreneurs and business owners need will help in that area.
I want to thank you very much. I've taken up most of your time, but I do want you to talk with Ms. Beatty further, and all of you, about what we can do to empower our small businesses and get them in the pre-bid conferences, get the incubators spread out so that they can help these small businesses. And we're working on the big banks, and we're seeing some progress there. So thank you, Ms. Beatty, for allowing me this time. Thank you.
No, thank you so much, Madam Chairwoman, and thank you for directing us in a future direction. The gentleman from the great state of Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Great state indeed. Thank you, Madam Chair. And thank you for holding this hearing.
I just have to add, go Bengals to that.
I struggle with that as a Clevelander, but I'm going to pull for him for Joe Burrow's sake. But in any event, great hearing. As many know, for the last 3 years, I've been focused on how do we extend more affordable credit and capital to all Americans, but knowing in particular that it's oftentimes our minority and women-owned businesses that struggle the most with this. So I think this is timely, especially in the context of the broader contracting issues that we're talking about. Ms. Quick, I want to start with you specifically. You have obviously the payroll product and a wallet product that is for employees. And I'm curious, you know, from what I can tell, y'all don't have an actual loan product. And I wonder why, because it strikes me that with payroll data and wallet level data, that your company is uniquely positioned to extend credit or maybe go in that direction. So I'd love to just hear your thoughts as to why that's not a place that you all have gone to this point.
Thank you for the question. We do have a Gusto Cash Out, which is a lending product that is based on estimated earned wages. It enables consumers that are on the platform to be able to access credit for no or low cost. And
can I interrupt you real fast on that? On that product, does that help them build their credit scores? Like, does that get that data ultimately filter back to the rating agencies, or is that just siloed inside of Gusto?
We are currently not reporting into the credit system, but we are thinking about ways to continue to expand our product mix to help individuals build credit.
Okay. Anything beyond the earned wage access product, like personal loans or anything like that, or have you all just specifically avoided that for any particular reason?
Yeah, we have partnered with institutions that offer small business loans. We have, as I mentioned in my testimony, we are connected to more than 80 financial institutions that offer small business financing products, including a number of CDFIs. We are partnered with Opportunity Fund and Pacific Community Ventures in our home state of California. And we are continuing to look at other ways to partner with CDFIs as well.
Thank you. And from my understanding of these products, I don't know the specific data around yours, but I believe it's a pretty strong way to help folks build credit who maybe are outside of the credit system today. So I'd encourage you to continue looking at that because obviously we want as many people to have access to affordable credit as humanly possible. Mr. Ali, I'm gonna shift to you for a second. I think your suggestion around mentorship programs and subcontracting to give MWBEs more opportunities and then to help them navigate the sometimes difficult bidding process makes a ton of sense. When I talk to some of these firms back home, they feel like they, for one reason or another, simply cannot or are excluded, actually, they would say, from being able to bid appropriately. And then you mentioned providing incentives for larger, more experienced firms to offer these mentorships. What sort of incentives did you have in mind? And maybe just drill down, like if you could be very specific about what you're thinking, I think that'd be helpful.
Yeah, thank you for the question, Representative Gonzalez. I think it's important to understand the connectedness is really how people get business done. People do business with people they know, people they like, and people they trust. And to have that ability to do that in an environment where we face different, it has not been easy. So I think specifically to have the larger businesses recognize or get connectedness through some of these minority business organizations like the U.S. Black Chamber or the NMSDC or AMAC to say, we're looking for clients that we can help mentor and grow and develop because we understand that that would also build community. And by providing providing incentives in their scoring as they are gaining contracts to make sure that they are utilizing these diverse businesses and then measuring the impact of those minority businesses on what they're doing in their community by hiring and giving back.
Yeah, I think I only have 30 seconds, but I really think this is an area that we should explore because your point around connectedness is absolutely right? For those people who come from either a connected family or have the right pedigree and background, accessing capital, accessing opportunities, getting bids, this is easy. It's one of the easiest things they can do. It's one of the best advantages they have. For those who are outside of that system, it can be an enormous challenge and it feels impossible in many respects. And so I think that's a great idea. Look forward to exploring it more with you and others on the committee.
Thank you. The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Thank you, Madam Chair. Thanks for holding this hearing. So I have a background in construction management. That's what my bachelor's degree is in. I spent 20 years as an iron worker. I'm the former president of the Iron Workers Union in Boston. And I have to tell you that in a lot of this work, the contracting process and the bidding process is really, it comes down to a secret handshake. Oftentimes there's a preferred bid list, and there's a process that is very difficult for a small firm or a new firm to break through. And we did have some success on the defense bill. a few years ago, we ran into the same problem that we're talking about with the infrastructure bill. And that is that firms that were known, that were reliable, that had good safety records, and had been through the process were readily recognized and successful in the bidding process. But newer firms and smaller firms were shut out of the process. And what Raytheon did, that's the big firm in my area on the defense side, they did a workshop. They brought in all these small women, minority businesses and did a workshop on how to bid in this process. And I think that would be enormously helpful. It's something that, because of the size of the dollar numbers on some of these big contracts coming out on infrastructure, you really have to try at the subcontractor level and bring people into the process. And it's really is complicated. It's difficult. And unless we make affirmative, steps to educate people and help them become part of the process, they're going to stay on the outside, and we're just going to have this, small number of contractors enjoying the benefits of these projects, and it's going to be less competitive. So, those smaller firms are really, we saw this on the defense side. The smaller firms bring the innovation and they bring the price down. So, I would just encourage you, Mr. Gaskin or Mr. Ali, are we doing any of that? Doing any workshops for women and minority-owned businesses to educate them on how this process works?
Thank you. And I support your comments. This goes back to the connection and the understanding of community, the entrepreneurs and business owners in communities, and what local institutions like CDFIs, NDIs, or others, they have access. They have the pulse of the community. They've been doing loans or microloans or other transactions with folks in the community. So convening is very important, because this is about the equal access to opportunity and support and knowledge that we mentioned in America's New Business Plan. Absolutely. And I've started at the community level and hold forums, or just have local folks invite local folks and come in, because otherwise, as I said in my comments, people are hiding in plain sight.
Right. Yeah, and I like to just edify those comments. If you're not intentionally inclusive, you become intentionally exclusive. And so the work needs to be clear. And also, it's not just only around providing education. It's that connectedness of really not being a mentor, but a sponsor. So when you have a corporation or a company that's bigger than a minority-owned business that says, I'm going to sponsor you, that means they're investing in you and they want you to be successful. So they become not just mentors, but coaches, and coaches want to win. And if they win with the right team members, they continue to provide them the success that they need, which means they give them their connectedness. They help them with their capital, and they help them with their capacity building. So I think it just can't be teaching, because that becomes really apathetic, because you're doing it out of whatever galvanized guilt you have. But when you just say, I'm going to take you in and to build you, is a different kind of conversation. Thank you.
No, I appreciate that. And it is building that relationship and that familiarity with the process that will lead to our success. There are examples of that happening, but unfortunately, they're more rare than we would like. So I'm just trying to figure out a way to plug these smaller minority and women-owned businesses into the process, so that they build those relationships and they have that opportunity. But I thank you, and Madam Chair, I thank you for holding this hearing, and I yield back. Thank you.
Thank you so much, Mr. Lynch. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Well, thank you, Chairwoman Beatty, and thanks to Ranking Member Wagner for holding this hearing. Now, I also want to thank our witnesses for being with us this morning. One of the successes of our pandemic response was no doubt the Paycheck Protection Program, which had significantly less fraud, as we've learned, or appears to have had significantly less fraud than the Economic Injury Disaster Loan, or EIDL program. According to the Small Business Administration's Office of Inspector General, the PPP had approximately $4.6 billion in potentially fraudulent activity, compared to 80+ billion in the EIDL program, although the PPP distributed exponentially more money. The PPP sent funds through the banking system, as we all know, while the EIDL program relied on the SBA as a direct lender. To quote from a statement by the Tennessee Bankers Association, the highlight for the SBA has been the PPP, which would have been an abject failure without the banking industry successfully executing the program. SBA has tried direct lending before and failed time and time again. Ms. Quick, in your testimony, you recommend streamlining the SBA loan application process to encourage more banks to participate in the SBA's lending programs. Could you also speak about the benefits of having SBA loans go through the banking system rather than relying on the SBA as a direct lender?
Yes, thank you for this question. So as you mentioned, the banking system was successful in getting billions and billions of dollars out for PPP. We believe that the PPP loans was successful in helping keep thousands of small businesses able to continue to pay their employees. And we are supportive of any kind of initiatives to both increase access for capital through the SBA or through additional private lenders in the system. As I mentioned, we believe that fintechs and other non-bank lenders do have the ability to expand access to credit for small businesses in underserved communities. We also believe that traditional financial institutions have the ability to help better serve small businesses as well. Some of the feedback that we've gotten from our Small Business Relief Council that we run has mentioned to us that small business lending is currently very difficult, either through the SBA or as a private company. And there are a lot of barriers to providing services to small businesses. So we recommend that both the private and public sector consider looking at alternative data to underwrite small business lending and be able to open that credit box for all small businesses.
So just thinking about the experience we've just had with PPP and the financial institutions, what can we do now to ensure that financial institutions remain an essential part of providing loans and liquidity to support businesses and communities, and particularly in times of economic stress?
I think we can encourage both lenders, the private lenders, as well as the Small Business Administration, to look at alternative data, as I mentioned. I touched on the fact that many small businesses need to present personal credit scores, collateral, a track record of length of time in business, and that can be a challenge, particularly for women and minority-owned businesses. We also think that there's more that we can do to provide financial education for small businesses. As we know, there are currently multiple avenues for small business resources through MBDA and SBA, but many businesses don't know about them. And so I think there's an opportunity to really make sure that these resources are more visible to small businesses, and that education is increased to let businesses know what kinds of things that they can access in the financial system.
Thank you. In just the few moments that we have left, you're no doubt aware of CFPB Section 1071 proposed rulemaking. And I'm wondering, without laying the predicate for that, but could you talk about how increasing, or what the negative impacts are of increasing costs of credit for small businesses that would likely accompany that rule being implemented?
Gusto is committed to transparency, and we support policies that can bring greater understanding of the small business credit market. We know from research that women and minority-owned business credit applications fare worse than white-owned business ones, resulting in lower access to capital for those groups. We do think it is essential to understand what is occurring in the market and try to discern the reasons why underserved businesses face barriers when trying to obtain credit, and that the overall goal is to bring greater fairness and equity to small business lending and create a better ecosystem for small businesses.
Thank you. I see my time's expired, Chairwoman Beatty, and I yield back.
Thank you so much. Now I recognize the gentlewoman from Massachusetts, Ms. Presley for 5 minutes. Oh, and before you start, happy birthday to you.
Oh, thank you so much, Madam Chair. And this is a wonderful day to start my day off. Thank you so much for your leadership, and thank you to our esteemed panelists for helping us tackle this critically important issue. As has been stated, and we know, but it bears repeating, that for too long, our traditional infrastructure investments and policies have really exacerbated inequities and disparities in our communities. In fact, the 1956 Interstate Highway Act, which created the cross-country system of freeways that we rely on every day, resulted in the displacement of more than 1 million people and more than 475,000 families in just 2 decades. These highways cut through our neighborhoods, they darken pedestrian routes, they worsened air quality, and they massively diminished property values. Predominantly Black, Brown, Indigenous, and low-income communities lost churches. We lost green space and entire swaths of homes. Our communities lost access to jobs and other critical resources, divestment that to this very day contributes to the growing racial wealth gap in our nation. Ms. McGuire, what role does taking on debt play in serving as a barrier for minority-owned businesses in this space?
Thank you for a great question. So as I shared earlier, as a business owner, we don't want to take on more debt loan. So the critical key to success is allow and give access to equity capital and government capital, enable them to grow.
Very good. And can you just expound upon that a little bit more as to what are some alternatives to loans that will help minority-owned businesses acquire the capital in order to be competitive for these contracts, which we have historically been locked out of?
Absolutely. So one thing is, we can partner with some of the large financial institutions, and many of them are corporate members. They're vital, critical stakeholders, can really extend funding opportunities and a really lifeline to these minority-owned, small-owned businesses. And all of them made a commitment to racial equity. You talk about racial wealth gap, and all of them made racial equity commitment to provide funding for infrastructure contracts and more. And this can be accomplished by using the racial equity commitment and associate funding to guarantee loans for MBE required to secure the contract. One example, very actionable example is, create a letter of intent for MOU that states if MBE wins a contract, we will guarantee a loan to cover, 100 days of payroll. That's one of the example. The other thing is not just about access, it's the burden of getting the capital. The underwriting criteria should be evaluated, and many small MWBE just don't have the financial acumen to receive the loans or equity capitals from different sources. And so help MWBE understand the requirement and create a path to success will be ideal. And the other thing I think Farad and many people talk about, it is the connection. People don't have a relationship nor the knowledge to gain access to capital. So how do we, the government and a community organization like us, become a matchmaker to connect our underserved communities with the source of a capital out there? And one of the ways to do it is through technology enablement. So what if?
Thank you, Ms. McGuire. I'll let you go on. Go on, please.
So what if, we have a tool that has all sorts of capital out there and intelligently match with the small minority women businesses who otherwise never had the access or relationship. And that can be easily created with AI, with today's technology advancement. Thank you for the question.
No, absolutely. And I think it just goes to show this is about intention and the will, and the solutions are available to us. And on the technical assistance side, as you talk about sort of the barriers in terms of relationships and access and acumen, and why mentorship is so important, and that we're intentional, in our lawmaking and ways to support that. Many of the folks that I hear from back in my district, the Massachusetts 7th Congressional District, they just don't have extra revenue lying around to hire expensive consultants and accountants to prepare applications. So many worry that they simply won't be ready. But again, thank you so much. At the end of the day, infrastructure in its development and its implementation has the potential to divide or to bridge, to reinforce oppression or to dismantle it. And we have to learn from the lessons of the past and chart a better course. Thank you.
Thank you so very much. The chair now recognizes the gentleman from South Carolina, Mr. Timmons, for 5 minutes.
Thank you, Madam Chairwoman. Ms. Quick, I want to follow up on Congresswoman Wagner's question about crowdfunding. I think there is a lot of potential in this space for women and minority startups to access capital. We have all seen the statistics about why these demographic groups have a harder time accessing institutional investors, be it pattern matching or whatever else. Crowdfunding seems to me to have a lot of potential in our efforts to create a more inclusive economy. In that same vein, I introduced legislation last year which would allow small businesses to more easily access venture capital. My bill, the Improving Capital Allocation for Newcomers Act, or the ICANN Act, would codify the recommendations from the SEC's Small Business Capital Formation Advisory Committee by increasing the cap on the aggregate amount of capital contributions and uncalled commitment capital from 10 million to 150 million, and also by increasing the allowable number of investors or beneficial owners from 250 to 600 for qualifying venture capital funds. Chair Gensler has yet to act on these recommendations made to him, so we introduced this bill. He seems more concerned with making life difficult for investors with more bureaucratic hurdles than anything else. He does not seem to have any capital formation agenda at all. I hope my colleagues will support this bill. I know it would certainly be a huge help to women and minority-owned startups and small businesses. Ms. Quick, could you speak to this proposal and how it could help entrepreneurs access additional capital?
Yes, we are supportive of proposals to help expand all options for small businesses to grow. We think capital is important. We don't have particular data on crowdfunding per se, but we would love to work with your office to further understand the proposal and to help think about additional small business capital options. We also support education and mentorship programs to help inform business owners of different financing options, and making sure that there are sufficient protections and risks and benefits considered in thinking about other forms of capital for small businesses.
Sure, thank you for that. 1 in 6 women have experienced domestic abuse, and 99% of women who have experienced domestic violence have also encountered financial abuse. This often includes the abuser taking out loans under the survivor's name to ruin their credit score. This was something I saw as a domestic violence prosecutor before I served in Congress. Ms. Quick, again, is there a way FinTech could support these women and their desire to become entrepreneurs and overcome challenges with their credit scores?
Yes, as I believe that FinTech has the possibility and opportunity to help these women who may be experiencing issues with credit scores. As I mentioned in my testimony, credit scores have been problematic for many different groups, including the women that you mentioned, and as well as minorities. And we do think that there's opportunity for FinTechs to use alternative data in their underwriting to help provide better financial services to women and to all individuals.
Sure, thank you for that as well. Another problem facing employers and entrepreneurs of all shapes and sizes is the current labor shortage we are experiencing. But the problem is felt much more sharply for small businesses where the loss of even a single employee can truly handicap an operation. What type of resources can your company and other FinTechs offer to folks who may not have the abilities or tools that come with a larger business?
Gusto provides a number of services to the smallest businesses to larger businesses. We help all of them manage their payroll, human resources, taxes, health insurance, financial health benefits, and help them grow and scale their businesses. And we really consider ourselves to be a partner to these businesses in kind of their day-to-day business experience. We believe in creating a world where work empowers a better life. And we think that both ourselves and other fintechs and other companies have ability to help small businesses scale and grow, and it's very important for the economy.
Sure, thank you for that. And just for your awareness, I own Swamp Rabbit CrossFit and Soul Yoga, and we are actually a customer of yours. So appreciate all the good work y'all are doing, and thank you. And with Madam Chairwoman, I yield back.
Thank you so much. Now the chairwoman recognizes the gentlewoman from Michigan, Ms. Tlaib, for 5 minutes.
Thank you, Chairwoman. I appreciate so much that we continue to be so laser focused on making sure that we have a seat at the table, and that implementation is really the heart of how to make sure that we all have access. So thank you so much. According to research conducted by our own Federal Reserve, business owners of color report having reduced access to traditional capital from banks and credit unions. In addition, their analysis also found that credit-worthy Black-owned businesses experience greater challenges raising capital than other counterparts. We know that this lack of access, we've heard it over and over again as members of Congress, the access to traditional capital has made it incredibly difficult for women and minority entrepreneurs to stand up and grow their business. And the Federal Reserve has found that in almost every financing category, everyone, be it loans, credit cards, outside investors, or grants, people of color, entrepreneurs were the least likely to receive full funding. So I'm incredibly concerned with how these barriers to capital are affecting the implementation of many of our federal programs and the distribution of federal dollars, whether it be the Emergency Paycheck Protection Program funding or access to federal contracting opportunities and the BIF, the Bipartisan Infrastructure Law. So, Ms. Black, Mr. Ali, would public banking help the administration of programs like the Paycheck Protection Program faster and more effective, as well as accessible to minority-owned businesses?
Thank you so much for that question. I would echo the comments that you offered. I would also offer another statistic coming from the Federal Reserve Bank Small Business Credit Survey, which noted that Black-owned business application rates for new funding are higher than that of their white counterpoints, but yet the approval rates in terms of the amount that is approved for them continues to be lower. And while I do think that public banking is a tool that we have, we also have the opportunity to continue to invest in community resources that can achieve revenue-based financing, forgivable loans that help address some of the opportunities that have been elevated by you and by your peers earlier in the questioning, and opportunities for equity investments. And the more that we continue to see those dollars come directly into communities that are trusted sources by our Black and brown business owners, the more that we're going to accelerate regional inclusive economic job growth.
Yeah, Mr. Ali.
Yeah, thank you very much for the question. I think it's important to recognize the impact that we've seen that CDFIs and the minority deposit institutions have done because of their ability to understand what's going on each block, as Mr. Gaskin has indicated. I think it's important to do both. To do right? If public financing is going to support, it should probably be more around the equity space of investing in businesses, much like they do with the SBIRs and other groups. They can share in the prosperity of businesses, because ultimately when the businesses prosper, they end up paying taxes anyway. So how do we make sure that we can invest in these businesses in a way that help them to grow? And understanding that the tier businesses of minority and women-owned firms are not all small businesses. We do have businesses that exceed 10 million, 50 million, $100 million. They're still suffering, not having the opportunity to access enough capital for them to grow and make the impact that they're making. And remembering a lot of these businesses also are hiring people that more look like them and act like them, or gender specific. So we see that more women-owned businesses hire more women employees, and we also see that diverse businesses, more black businesses hire more black people, more Asian, more Hispanic.
Oh, yeah,
so
I've seen it in my own. Yeah, I've seen it in my own community. I do want Ms. Black, Mr. Ali, know that public banking for me is really going to be one of those things in the toolbox. I know will combat some of the things that traditional banks are just not going to do. It's overwhelming how much we educate, tell people about various opportunities, but they continue to get denied. So I know it's going to be effective in increasing access to federal contracting opportunities for minority-owned businesses and expand access to credit for so many folks. And I think everyone knows on the panel that the PPP was specifically designed to assist businesses that were hit the hardest. Yet, according to the National Bureau of Economic Research, minority businesses were less likely to receive those loans. Many of the members of the Congressional Black Caucus tried to address it in the second round. But I know, again, the Federal Reserve Bank of New York found that counties, including Wayne County, Michigan, that I represent, with higher concentration of Black businesses, saw the lowest rates of PPP allocation. And so the inequities, as you all know, aren't new. I am worried that if we're not deliberate in empowering MWBEs in the implementation of the bipartisan infrastructure law, we risk deepening that racial divide, racial wealth divide. And so, again, I want to reiterate a push to try to, again, come up with an alternative to traditional banks. Thank you, Madam Chair, and I yield.
Thank you so much, Ms. Tlaib. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Chair Beatty, and thank you to all of our witnesses for your testimony today. As has been discussed at length here today, we cannot improve minority and women-owned businesses' access to federal contracts without addressing the fundamental issue of access to capital. When I talk to minority and women-owned businesses in my own district, suburban Philadelphia, one of the most common things I hear is how difficult it is to access capital, and as you all know, especially adequate startup capital. A sad statistic in Philadelphia, which is adjacent to my district, I'm struck by an analysis that shows we have the lowest number of Black-owned businesses per capita compared to other big cities. We clearly have a lot of work to do to ensure that these businesses can access the capital that they need. Mr. Gaskin, in your testimony, you speak about the Kauffman Capital Access Lab, an innovative pilot program to develop investment managers and provide new capital to underserved entrepreneurs. Can you tell us a little bit more about the lessons learned from this program? Do you think this model could or should be adopted at the federal level?
Well, thank you for the question. Absolutely, we do. We started with our research showing that 83% of entrepreneurs do not access a bank loan or venture capital at the time of startup. So we looked at how could we test a new way, a new system of getting access, improving capital access to entrepreneurs. And through a mechanism invested in 6 funds, and those funds are doing innovative type of financing, revenue-based financing, and other type of things that take the pressure off the entrepreneur at the beginning. Revenue-based financing, you're paying back the loan as you make revenues. And we're seeing that of our initial $3 million investment through the Capital Access Initiative, those funds have now raised over $177 million in additional funding 40 entrepreneur companies that are having returns. And so it shows 2 things. It shows that alternative means of capital are very, very important, and that these entrepreneurs that may be perceived as being risky are not risky. Our work with CDFIs as well is showing that. But I highly recommend that alternative and innovative ways of financing is embraced more by traditional institutions.
That is exciting, and that innovation and that expansion by way of the innovation is really exciting. Thank you for that answer. Ms. Quick, and I apologize if you have spoken of this, but in your testimony, you talked about the challenges of delayed payments for federal contracts for businesses with the least access to capital, which unfortunately includes many minority and women-owned businesses. Can you speak more about the consequences of delayed payments to cash flow and to the growth of a business? What can we in Congress do to address the issue?
Yes, thank you for the question, Congresswoman. We have found that delayed payments have impacted small businesses. On average, small businesses are owed around $900 billion by both companies that they work with, as well as by state, local, and federal government agencies. And we are advocating for government payments to be made more quickly to small businesses. When they are not able to access that capital that they are owed, this leads to a mismatch in capital access between when that small business incurs expenses and when they receive the payments back from the government. We support a return of the Quick Pay Initiative, which was an initiative under the Obama administration, and it guaranteed payment from the federal government within 15 days. That kind of requirement for states that are distributing infrastructure dollars will ensure that businesses are rightfully paid on time without needing to incur new debt.
Thank you. That's powerful. Ms. Black, finally with you, what actions can the private, public, and social sector organizations take so that the ecosystem of financial assistance and minority-owned businesses' access to capital is able to expand sustainably?
Thank you so much for that question. There's a real opportunity for us here to begin to marry solutions across sectors. The private sector has an opportunity to not only be investing in both the CDIs and MDIs and other community-based solutions, but also to be leveraging their supply chain opportunities in the same way that government does here. It's not only about policies, but also continuing to increase the purchasing that takes place from Black and brown businesses, from women-owned businesses, in order to increase job growth in our communities. And they have to be married in those investments that are coming from the social sector in order to accelerate job growth and economic growth, recognizing, again, there is not the risk that is inherently portrayed in our communities.
Thank you very much for that answer, and so quickly delivered. Thank you, Madam Chair. My time has expired. I yield back.
Thank you so much for your questions. Madam Ranking Member, we're going to go to our next witness, which is a Democrat, unless you have any other witnesses.
Still waiting for Mr. Lucas, but I'll see if he's able to join, but we're good.
Okay, we'll come back to you afterwards. Thank you. The gentleman from Texas, Mrs. Garcia, who is also the vice chair of this subcommittee, is now recognized for 5 minutes.
Can I do
Thank you,
trial errors and lie down?
Thank you so much for bringing these witnesses forward. It's been very enlightening. You know, I was a founding member of the Houston Hispanic Chamber of Commerce a couple of decades ago, so it seems like, and it's I'm feeling like I'm in a movie sequel to Back into the Future, because we seem to be talking about some of the very same issues that we talked about back in the 80s. Well, we've made some improvements. There's still so much more to do in this area to help our small businesses throughout the country. It's widely known that small businesses face great barriers in accessing critical resources, new opportunities, and capital than bigger corporations. We saw that during the economic recovery that we've been going through. These barriers are compounded by factors such as race, ethnicity, gender, and language, making it more difficult for minority and women-owned businesses to get ahead. Even if firms are not engaging in outwardly discriminatory behavior, subconscious bias and cultural distance have made it more difficult for lenders and entrepreneurs to connect. So we must do everything we can to get that connection. So I want to start with Ms. Black. Ms. Black, first let me thank you for being regrettably the only member of the panel that mentioned Latinos and the impact of some of these programs on Latinos. So I thank you for that. And want to specifically ask you, can you describe some of the language and cultural barriers that you see small business owners face? And how does this impact our ability to pursue new business opportunities that they are competitive, that they can be competitive in?
Yes, thank you so much for that, Representative Garcia. I think it's important that when we think about language barriers, we recognize that it's not only a barrier of translation, which so often programs are designed in, but it's important for us to think about designing strategies from beginning to end in order to serve both consumers, but also business owners, in order to serve them in their own language and also in customs. In our organization just today, we're announcing a new program, a set of both customized tools and solutions in order to grow programs and businesses, specifically serving Black women and Latino women in Minnesota, in order to grow businesses in growth sectors, in order to serve so many large corporations in our communities. And that means beginning in the beginning from the end. And so having programs that represent those communities, making sure that they're able to serve their consumers, whether those are in growth sectors, in restaurateurs, being able to go the distance and understanding those communities. But that means we have to have staff that come from those communities inside government agencies like your own, making sure that we have those inside our corporations and that we have them in every department and not simply concentrated on the front lines.
Well, thank you. As you know, the growth rate in the number of Latino-owned employer businesses was higher than the U.S. national average growth rate for all employer businesses in 41 states. This is one of the conclusions of a study that Stanford did in 2020. And Madam Chair, I ask unanimous consent to submit this for the record.
Without objection.
Thank you. So I think it's critical that we look at the whole picture when we talk about diversity and inclusion. And I was struck with I have a question for Ms. McGuire. I was struck that you one of your recommendations was for the Congress was establishing a designation of minority business enterprise. What do you mean by that? I know we go through the MWBE certification. So is this something different? And how would this be different?
Thank you, Congressman Garcia, my fellow Texan. I actually live in Austin, Texas.
Well, Austin is not Houston.
So the Minority Business Enterprise designation, MBE designation, is different because today MBE is buried under small disadvantaged business. So if you look at SBA designation in the federal procurement system, you have a woman, you have HUB, you have veteran, disabled veteran, you have actually Alaskan Tribe Native American designation, but you do not have a designation said it's a minority-owned business designation. And so
it would be a standalone designation.
Exactly. And that's the only way that we can clearly connect the 15% spent to that designation, because today there's not a designation in the federal procurement system says minority-owned businesses. In the private sector, NMSDC, we certify Asian, Hispanic, Black, Native American as an MBE designation, and a mini state local government has MBE designation. The only place doesn't have MBE designation is the federal government, and that's what I'm suggesting.
Right. Well, thank you for that clarification. And Madam Chair, I think that's something certainly that we can work on that shouldn't be insurmountable, and that be willing to work with you and the rest of the committee on that. So with that, I yield back. I see my time has expired. Thank you.
Thank you so much, Madam Vice Chair. Now I recognize the gentleman from Massachusetts, Mr. Auchincloss, for 5 minutes.
Thank you, Madam Chair. Mr. Gaskin, in your written testimony, you shared the story of your father's struggles to receive a small business loan to open a convenience store in his community, and after 4 years, he was finally able to receive a bank loan from a Black-owned bank. I introduced the Promoting New and Diverse Depository Institutions Act because banks and credit unions are a highly sought-after funding tool for small businesses, but bank closures and consolidations have limited the options for potential minority-owned small business owners that are already constantly hearing no. So in short, the Promoting New and Diverse Depository Institutions Act would require that prudential regulators create a strategic plan to help de novo financial institutions, including MDIs and CDFIs, start and restore competition on a level playing field to small business lending. Mr. Gaskin, I'll start with you, but I welcome any of our witnesses to weigh in here. Can you share the importance of how sustaining a competitive financial services market will help entrepreneurs, and particularly entrepreneurs of color, with affordable capital options?
And thank you for the question. Looking back, I wish my dad had more. There was more access, more competition in the banking and CDFI and the CDF market. I'll share a story here from Kansas City and the importance of CDFIs that we've proven out during PPP. It was the creation of the Kansas City COVID-19 Recovery Loan Fund, and we invested in AltCap, a leading CDFI here in Kansas City, first investment, and it helped them raise a larger fund. And over 153 microloans were made, zero default rate. And it proves out that there are entrepreneurs and small business owners right here in communities. And CDFIs and MDIs know the communities, they know the entrepreneurs. And a lot of entrepreneurs, especially in smaller businesses, are just starting out, of course, don't have relationships with banks. So when the PPP program happened, some of them just couldn't connect with banks because there was not a long-standing relationship there. So I applaud with what you're doing, because I believe the more community banking and access to the entrepreneurs and small business owners in those markets is highly important.
And again, for you, Mr. Gaskin, or for any of our other witnesses, could you elucidate how these smaller institutions and how organizations like yours and others that are working to provide access to entrepreneurs of color can work with the really big players in the financial services system? So, Bank of America, Goldman Sachs, JP Morgan, they've all made quite tangible commitments to funding small business formation, and particularly for underserved communities. Where are the ligaments of connection there to make sure that that capital is going to the highest and best use?
Yeah, thank you. And I believe there's the connection opportunity there, because I think it can be complementary funding initiatives. And so in America's New Business Plan, we lay out funding suggestions that we hope that the committee takes a look at and considers, because I think there's some public-private financial investment institutions could really find ways and close some of these gaps and connect the dots so that the money flow to communities is much more fluent and reaches the end user, who sometimes don't know the programs are available.
Right, because it sort of combines the best of both worlds, right? You got the capital of some of these big institutions, but then you got the community knowledge and relationships of the smaller credit banks.
Exactly, yeah, exactly.
Ms. Quick, I was struck in your written testimony, and I apologize, I didn't hear you say it, but you may have, about the problem with receivables for small businesses and the federal government's delayed payment of those receivables. I think you calculated it more than 800 billion outstanding, and the challenges that poses to working capital for small businesses. I wanted to give you a chance to expound upon that in the hearing.
Sure. So in 2020, Gusto was part of the Pay Today coalition that brought awareness to this issue. We found through our coalition data, which we partnered with Fundbox on this, that small businesses are owed around $900 billion and take on average 28 days to get paid. This includes payments from both governments and from larger companies that they may be owed money from on receivables. And that the government payments can take even longer. They sometimes will take months at a time to get paid money that is rightfully owed to the small businesses.
And Ms. Quick, I apologize, I'm gonna jump in because my time has expired. I want to give you 10 seconds. What's the most important thing Congress could do to help that problem?
Congress can require the federal government to pay small businesses faster, within 15 days.
Thank you. Madam Chair, I yield back.
Thank you so much. Mrs. Wagner, if we have no more witnesses from your side, we have exhausted the witnesses from our side as well.
It was a great hearing. Thank you.
Thank you. The chair would now like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask the witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I remind members to submit written questions and materials for the record to the email address provided to your staff. The hearing is now adjourned.